Welcome to Shri Mukambika Online Tuition, Learn from the Basics. Hello everyone. Welcome back to today's session on journal entries. We are going to record and understand the journal entries for the transactions of Mr. Ashok for the month of September, and most importantly, we'll see why each account is debited or credited and what type of account it belongs to. Let's begin. Journalize the following transactions in the book of Mr. Ashok. 2009 September. 1. Commenced business with cash, rupees 80,000. September 4. Purchased goods for cash, rupees 5,000. September 8. Purchased furniture for rupees 6,000. September 9. Sold goods for rupees 4,000. September 15. Bought goods from Madhavan for rupees 10,000. September 17. Sold goods to Shyam for cash, rupees 2,000. September 20. Sold goods to Anil for rupees 3,000. September 22. Paid Madhavan cash, rupees 5,000. September 23. Paid for stationery, rupees 200. September 25. Received cash from Anil, rupees 3,000. September 29. Received commission, rupees 30. September 30. Paid salaries to accountant, rupees 2,000. September 30. Paid rent to landlord, rupees 1,500. 1st September, commenced business with cash 80,000 rupees. Mr. Ashok started his business by investing 80,000 rupees in cash. Here, cash account is a real account and it represents an asset. Cash is coming into the business, so as per the rule of real accounts, debit what comes in, we debit the cash account. The other account is capital account, which is a personal account and represents the owner's equity or liability of the business towards the owner. Since the owner is the giver of money, we credit the capital account as per the rule, credit the giver. 4th September, purchased goods for cash 5,000 rupees. When goods are purchased for cash, purchases account is affected. Purchases represent an expense and come under the nominal account. As per the rule, debit all expenses and losses, we debit the purchases account. Cash account is a real account and cash is going out, so we credit cash account following credit what goes out. 8th September, purchased furniture for 6,000 rupees. Here, furniture account is an asset account under the category of real accounts. Since the business is gaining an asset, we debit the furniture account because debit what comes in. Cash account, again a real account, is decreasing as cash goes out. So we credit cash account, credit what goes out. 9th September, sold goods for cash 4,000 rupees. In this case, cash account, which is a real account, asset, increases as money comes in. So, we debit the cash account, debit what comes in. Sales account is a nominal account and represents income. As per the rule, credit all incomes and gains, we credit the sales account. 15th September, bought goods from Madhavan on credit 10,000 rupees. Here, purchases account is an expense account under nominal accounts and therefore, we debit purchases account, debit all expenses and losses. Madhavan account is a personal account because he is a creditor, a person who has given goods to the business on credit. According to the rule, credit the giver, we credit Madhavan account. 17th September, sold goods to Shyam for cash 2,000 rupees. Cash account is a real account, asset, and cash is received, so we debit cash account, debit what comes in. Sales account is a nominal account and represents income, so we credit sales account, credit all incomes and gains. 20th September, sold goods to Anil on credit 3,000 rupees. In this case, Anil account is a personal account because he is a debtor, a person who owes money to the business. We debit Anil account, debit the receiver. Sales account, being a nominal account, income, is credited, credit all incomes and gains. 22nd September, paid Madhavan cash 5,000 rupees. Now the business pays Madhavan, who was our creditor. Madhavan account is a personal account, and since he is now receiving the money, we debit Madhavan account, debit the receiver. Cash account, a real account, decreases as cash goes out, so we credit cash account, credit what goes out. 23rd September, paid for stationery 200 rupees. Stationery account is an expense account under nominal accounts. Since stationery is an expense for the business, we debit stationery account, debit all expenses and losses. Cash account, being real, is going out of the business, so we credit cash account, credit what goes out. 25th September, received cash from Anil 3,000 rupees. Anil, who was our debtor, is now paying the money he owed. Cash account is a real account, asset, and cash is coming in, so we debit cash account, debit what comes in. Anil account is a personal account, and as he is the giver, we credit Anil account, credit the giver. 29th September, received commission 30 rupees. Cash account is a real account and money is coming into the business, so we debit cash account, debit what comes in. Commission account is a nominal account, income, and therefore we credit commission account, credit all incomes and gains. 30th September, paid salaries, 2000 rupees. Salary account is an expense account under nominal accounts. Salaries paid are expenses, so we debit salary account, debit all expenses and losses. Cash account is a real account, asset, and since cash goes out, we credit cash account, credit what goes out. 30th September, paid rent 1500 rupees. Rent account is an expense account belonging to nominal accounts. Rent paid is an expense, so we debit rent account, debit all expenses and losses. Cash account, a real account, asset, is reduced, so we credit cash account, credit what goes out. That's all for today. We've completed the journal entries for Mr. Ashok with full reasoning and account classifications. Keep practicing, and soon you'll find journalizing as easy as storytelling.
Thank you.